Welcome back to Wall Street Podcast. Today we're diving deep into the latest Goldman Sachs Global E-commerce Handbook.
The third edition.
Yeah,
Right. Just published yesterday, July 8th, 2025.
that's the one. And our mission for you today is, well, really to unpack the key trends.
And the debates impacting global e-commerce.
Exactly. We want to pull out the most vital nuggets of knowledge from this pretty comprehensive report.
We'll give you that shortcut to being well-informed on where this huge market is heading.
The opportunities, the risks.
And what it all means for investment for strategy. Let's get right into the data.
Okay, let's unpack this first module, the global outlook. The report kicks off forecasting global e-commerce sales growth at plus 6% CAGR,
That's right, compound annual growth rate between 2025 and 2030.
which is expected to push global sales to, what, $6.4 trillion?
A massive number. And what's interesting, as you pointed out, is online channels keep outpacing GDP and total retail.
But the pace of people moving online, that's actually slowing down.
Precisely. It signals maturity in the sector. The initial, almost explosive growth phase is kind of behind us.
So the land grab is slowing, which raises the question, where's the highest growth potential now?
Yeah, if the overall migration slows, where do you look? The report points clearly to regions with the lowest online penetration.
So India, LatAm, ASEAN.
Exactly. And also specific categories. Food and beverage is a big one.
Ah, right. Projected at plus 10% CAGR for online sales.
Yep, 2025 to 2030. And that's mainly because it's still so underpenetrated. Globally, less than 10% of food and beverage sales happen online today.
Still under 10%. That's a lot of room to run.
Huge potential there.
Okay, so that's the opportunity side. What about the flip side? Key risks.
Well, the big ones are macroeconomic headwinds and tariffs.
Okay.
Goldman's own macro teams are anticipating a global real GDP slowdown in 2025.
Most pronounced where? The U.S.
The U.S. first, then Asia. And that obviously is consumer spending. And then you have tariffs. The whole changing global trade environment. It's a major source of uncertainty for these forecasts.
So slower demand, potentially meeting higher costs. Not ideal.
Not ideal at all. It impacts supply chains, consumer prices. It's a key watch point.
All right, let's shift gears. Module 2, the regional deep dive. How does this play out on the ground?
Good idea. Let's break down the major markets, maybe grouping them by maturity.
Yeah, let's start with the big established ones. U.S., China, maybe Europe.
Sounds good.
Mm.
In these highly penetrated markets, the game isn't just getting people online anymore.
It's about getting more of their existing online spend, right?
Quite often through essentials, convenience, integrated experiences.
Okay, so the United States. Expected growth is plus 6% CAGR through 2030.
Right, hitting almost $1.7 trillion. But that's a clear slowdown from the mid-teens growth we saw pre-COVID.
And what's driving even that 6%? You mentioned essentials.
Absolutely. Consumers are prioritizing. Look at the 2024 numbers. Food and beverage online sales up plus 12% year over year. Pet care up plus 10%. Health and beauty plus 8%. And who's winning?
The big guys get bigger.
Pretty much. Amazon, Walmart, Temu, Shopify, Costco. They all gained e-commerce share in the U.S. in 2024.
Why them specifically?
Scale helps, obviously. But also that focus on essentials, strong consumables businesses, and really effective omni-channel strategies, blending online and offline seamlessly.
Makes sense. Okay, let's jump to China. It feels like a glimpse into the future sometimes.
It really does. Despite incredibly high online penetration, they're still forecasting plus 6% growth in 2025.
To $1.9 trillion, but you said the how is interesting there.
Very. The market is intensely competitive, but also super concentrated.
Top 5 players have what, over 90%?
Over 90%. Alibaba is still the largest at 37%, then PDD, Pinduoduo at 22%, JD at 19%.
And the key trend.
It's this shift towards on-demand e-commerce. Platforms becoming everyday apps.
So integrating everything, goods, services.
Exactly, making the platform indispensable. But profitability is expected to flatten a bit.
Why is that? More competition.
Partly, but also increased focus on social responsibility and significant merchant support programs. Like Pinduoduo's RMB 100 billion program. That's huge.
Out 14 billion US dollars, right? Aimed at helping merchants.
Yeah, building a healthier ecosystem for the long run.
Interesting. Okay, Europe. Similar growth projection, around plus 6.5% CAGR.
That's the forecast for addressable sales, 2025-2030. But Europe is, very diverse.
How so?
Look at online food penetration. The UK leads significantly at 16%.
16%, okay.
Compare that to Germany at 3.5% or Italy around 1.5%.
Yep.
Big differences.
And the competitive landscape. getting tougher.
Definitely intensifying. You've got TikTok Shop launching in Germany, Italy, France just this past March.
TikTok Shop, right?
Amazon launched Amazon Haul in the UK, plus more ad spend from Chinese aggregators.
So established players like Zalando, how are they positioned?
Goldman highlights Zalando as a likely beneficiary because of its scale, its pure play focus, and its growing B2B offerings for other brands.
Okay. And quickly Korea, more modest growth.
Yeah, forecast at plus 5% year over year for 2025. Online penetration is resilient despite macro challenges.
And the threat from Chinese players.
Minimal, actually. The report notes consumer concerns in Korea about product quality and safety from cross-border Chinese platforms.
Right.
It's actually slowed that segment down.
So who's winning in Korea then?
Coupang is singled out as the dominant winner.
Their next-day delivery is key, right?
Absolutely. Nationwide next-day delivery, low average selling prices. They continue to gain market share quite strongly.
Okay, that covers the mature markets. Let's pivot now to the high-growth emerging ones.
Right. This is where the story shifts to unlocking that untapped potential. Much faster CAGRs here.
Starting with ASEAN, looking at a robust plus 12% ASEAR.
Between 2024 and 2027, yes, Vietnam is projected to be the fastest growing within ASEAN.
Lower base, big digital uptake.
Exactly. Though Indonesia remains the biggest market overall, just by population size.
And the competitive dynamic, settling down.
Stabilizing towards a duopoly, it seems. Shopee and TikTok. Both are increasing monetization, pulling back on those heavy subsidies from before.
What about players like Temu in ASEAN?
Limited traction so far. The report suggests weaker value propositions compared to local players, plus regulatory hurdles.
Like in Indonesia and Vietnam, protecting local sellers.
Precisely. Those barriers are significant.
Okay, let's move to Latin America. LatAm, also strong growth, plus 11% CAGR.
Yes. In U.S. dollar terms, between 2025 and 2027, Brazil is the giant here, expected to be about 40% of LatAm online sales.
And Mercado Libre still dominates.
Absolutely. Estimated 45% market share in Brazil for 2025. But Shopee has made huge inroads, now the second largest at 16%.
Competition sounds fierce, especially at lower price points.
Very fierce. And you have new entrants like Temu making noise.
Temu's user acquisition is impressive there, right? 57 million MAUs in Brazil.
Incredible user numbers by April 2025. But, and this is a big but, they face serious tax challenges.
I'll bet.
Cumulative taxes on cross-border shipments under $50, hitting 40% to 44%. That's a massive hurdle for their model.
Wow, yeah. That definitely changes the economics. Okay, finally, India. The growth numbers here are staggering.
They really are. Projected plus 20% CAGR overall from 2024 to 2027.
Driven significantly by
Quick commerce. That segment alone is forecast for a plus 38% CAGR.
38%. And it's moving beyond just groceries.
Rapidly into all sorts of non-grocery categories. They hit an annualized gross order value of $12 billion as of March 2025.
$12 billion already. Is it too crowded?
Competition is intense, no doubt. But the report suggests there's actually room for 3-4 players to coexist profitably given the market growth.
And Goldman highlights Zomato, or Eternal, as they're now known.
Yes, Zomato Eternal is noted as a top pick. They benefit from that first-mover advantage in quick commerce, plus their strong position in traditional food delivery.
That is a truly whirlwind tour of the globe. Thanks for breaking that down.
No problem. It shows how diverse the e-commerce story really is.
Absolutely. So now let's dig into some deeper questions. The kind of things our listeners navigating these trends might be asking.
Right, the so what questions.
Right.
Connecting the data to implications.
Okay, first one. We talked about the macro slowdown, the tariff risks. Given those, what are the most significant financial risks for the sector? And how should investors look at valuations right now? Multiples are down, but are things actually cheap?
That's the million-dollar question, isn't it? The primary risks are definitely that slowing global GDP growth, especially U.S. and Asia, and the tariff uncertainty. They hit demand and costs.
And valuations, they're below average, right?
Yes, global e-commerce valuation multiples, thinking specifically EV/GMV, enterprise value to gross merchandise value, are well below their long-term averages, even if you exclude the crazy COVID peaks.
But there's always a but.
But this mostly just reflects the sector's slower growth profile going forward. If you adjust for growth, look at growth-adjusted multiples.
They're still normal or even high.
They remain at or even above historical norms. So Goldman makes a crucial point here for investors.
Which is?
A buy-and-hold investor probably isn't going to get more than a 10% long-term return if they're paying over 1.0x EV/GMV for an e-commerce company today.
Why not?
because the growth and margin assumptions needed to justify valuations much higher than that are just, well, they're really demanding compared to historical performance in a maturing market.
So what's a more realistic baseline?
The sector's average EV/GMV multiple outside of COVID was around 0.9x. That's more consistent with maybe a 7% long-term internal rate of return. Respectable, but not explosive.
Okay, so cheaper doesn't automatically mean bargain if the growth isn't what it used to be. That's critical context.
Precisely. You need to factor in the new growth reality.
Got it. Question 2. We saw huge regional variations. Which specific regions and product categories offer the most compelling growth stories? And what's really driving that potential uniquely in those places?
Well, the report is pretty clear on the highest growth potential being where penetration is lowest. That's India, LatAm, and ASEAN. It's simply bringing more people into the digital economy.
And categories, food and beverage stood out.
Globally, yes. That plus 10% CRGR projection, driven by being under 10% online penetration today. Massive headroom. But regionally, it gets more specific.
Like quick commerce in India.
Exactly. That plus 38% CIGR forecast is phenomenal. And it's not just groceries anymore. It's electronics, fashion, everything delivered fast. It's fundamentally changing consumption habits.
And if you connect that to, say, China.
In China, you see the everyday app battle, integrating high-frequency services like food delivery to cross-sell everything else. It shows how mature markets innovate differently, focusing on hyper-convenience and integration.
So it's about solving different problems.
Right.
Basic access in some regions, ultimate convenience in others.
You've got it. Finding the next layer of efficiency your consumer need.
Makes sense. Okay, final question. The report stresses consolidation, the large getting larger. What strategies are these leaders using to win? What's their playbook in tough markets like China or LatAm?
The playbook boils down to leveraging scale. Scale wins.
What does scale enable?
It enables the winning trifecta. Consistently low prices, super fast delivery, and an incredibly wide selection. Why would a household shop anywhere else if one platform offers all that?
So they consolidate household spending.
Exactly. But how they apply this scale varies. In the U.S., it's leaning into essentials. Amazon, Walmart, with their strong consumables base, thrive when consumers prioritize needs.
And in China, where everyone's big.
There, incumbents like Alibaba focus on improving monetization from their vast user base, while challengers like Pinduoduo invest heavily in merchant support, building that ecosystem.
Right, the RMB 100 billion program.
And in LatAm, you see Mercado Libre getting tactical, lowering free shipping thresholds, sometimes down to $19, which is just a few dollars,
Why so low?
to compete in lower average selling price categories and basically incentivize people to buy even small, everyday items online, pushing penetration in underserved segments.
So it's about adapting the core scale advantages to specific market conditions.
Precisely. Which leads to maybe a final thought. As these markets mature globally, is the cutting edge of innovation less about brand new concepts?
And more about just optimizing, delivery, pricing, merchant support, making the existing machine run better.
Exactly. Is it shifting from disruption to optimization?
That's a powerful thought to leave you with. The changing face of innovation in a maturing global e-commerce world.
Yeah, the key takeaways really are about understanding those regional nuances, the resilience of online despite headwinds, and the strategic chess game the leaders are playing.
It's definitely not just about pure growth anymore.
It's about smart, strategic growth and execution.
Well, we hope this deep dive into Goldman Sachs' 2025 Global E-commerce Handbook has given you some valuable insights. Remember, staying informed is crucial. Join us next time for another deep dive into the sources that matter most to you.